uh, hopefully sound now. That's why I normally test. Let me see. Testing 1, 2, 3. Oh crap! Hang on. Yeah, it's so funny. I started this video talking about how I was alone and I have to press all the buttons myself, and there we are. I screwed up with the sound. Mic was not activated. The amp was not activated. So, anyway, live TV. So this video today is about hard assets and why the world needs them, why we're going down a certain path, and what'll make them so popular. In addition, this was not the planned video for today. That'll come soon, but there's a lot of work behind that. So this is rough and ready, but it'll be a good one. And of course, it's edutainment. And the story, believe it or not, there's so much news out there. We'll talk about crypto markets, all the good stuff happening there. We'll talk about some bears and some haters, and even like Mike Wilson, I think, from Morgan Stanley, who's on TV today, hoping for his 3,200 S&P 500 target. When S&P 500 is coming up to the 4,200 level, it's kind of really bizarre. Got some great news out of the UK. So for all the Brits in the chat, some good things happening out of London at last, which is very positive. The whole choke point dilemma seems to be backfiring. Like I say, when you try and kill Bitcoin, you make it stronger. So here we are. So let's talk about some of the good news, why the markets are really hot today. And before we get into the crypto stuff, Andy, appreciate you down under. The market's really rallied hard. US stocks rose on inflation's risk easing again with another good number today. Dow Jones up about 400 points, S&P 1.3, NASDAQ 2%. We know tech always outperforms. And the rise was attributed to a lot of cool economic data that showed inflation continuing to soften fast. And this could lead to an increase in companies' profit margins. And Wednesday's cooler than expected reading on consumer prices also added to investor hopes that the Federal Reserve may stop hiking rates to curb inflation by reducing the economic demand. And it's funny, actually, 2 of my holdings today were up exactly 2.97%. Tesla and Meta. Unbelievable. 2.97%. What are the odds of that? Anyway, let's jump in. Let's talk about some Bitcoin news first. In hardness news, as I say, the Bitcoin illiquid supply just hit an 8-year high, and that rhymes, and it's not getting any softer, ladies and gentlemen. And we haven't been down on this level for 8 years. And again, it's draining from everywhere, and it's becoming truly the hardest money out there. In addition, in some excellent news, 74% of Bitcoin holders are in profit. Again, these are people that have bought back in time. So there are people I know out there that did buy at the top back in November 2021, but it will come back. It's just a question of time. So don't lose hope. Don't lose faith. But this chart here shows you the 7-day moving average of percentage of addresses in profit, and it reached that 1-year high of approximately 74%, which is stunning. And obviously last time it happened was exactly a year ago. So, and we all know what happened between March and the bottom in November 2022. It was an ugly period, hit by a lot of black swans. And funny news as well, unexpected news. The National Bank of Canada, hello to all the Canadians up there, we're talking about a lot of Commonwealth countries today. National Bank of Canada increased its shareholdings in MicroStrategy by a big chunk, revealing that the bank now holds a truckload of shares valued at, I'm not sure of the exact number, but quite a bit anyway. But the point is, this is on top of all of the other firms that we saw who were stacking MicroStrategy. Giants like BlackRock, Fidelity, Bank of America, all gaining exposure to Bitcoin by buying this asset, which is extremely good. And this is a trend that will continue. We spoke a lot last year. We expected that to be the year of treasuries adding Bitcoin to the balance sheet. Didn't really come to fruition, but now it's happening, which is interesting. Speaking of stacking, not just Canadian banks, I had a theory on Tuesday in Okta that the 1K to 5K whales that were selling were probably buying back again. And I told you I'd find proof. And here it is. And a big thank you to Sanjay for sharing it with me. Here, whales are buying. All cohorts are buying. greater than 10K, the 1K to 10K, that everybody across the board is stacking sats right now. And that is impressive. So the question is, when you zoom out and you think, okay, all the whales are buying at 30K, what does that mean? Well, typically you could construe that means this is the new floor for Bitcoin, 30K. And that 30K actually was the old floor for Bitcoin before all the black swans happened. So here we are, more confidence, and don't necessarily take it to the bank, but 30K is an important number. And I did tweet this about 4 days ago. It says 4 hours ago, I wrote, once we cross the 30K threshold, it may, not definitely, it may mark the end of Bitcoin's sub 30K era. And who believes we may not see sub 30K again? Again, it's been bouncing around a lot. It's been very, very quiet the last 2 or 3 days. But the point of me sharing this is about bias and sentiment. And I want to try and share, thank you, MT, I want to try to share kind of a key lesson. I was going to actually do another video today. I was up all night thinking about this, about the psychology of the markets. And it's such an important thing to consider. So if you consider sentiment and following sentiment, you will never win. I always say blaze your own trail, etc. But sometimes there can be echo chambers that distort reality. It prevents exposure to different perspectives, confirmation bias, polarization, etc. This can all lead to a narrow-minded perspective and, of course, a toxic online environment. And when you say things like this, you get a lot of ugly responses. But blindly following a sentiment can impede critical thinking and intellectual growth, everybody. Here, per this little survey that, nearly 10,000 people filled out, nearly 60% think, yeah, no, we're going down hard. And sometimes you got to go against the grain. And the question is, from all the data that I just shared, maybe, not guaranteeing, barring any unforeseen circumstance, maybe 30K is the new floor. It will bounce around a lot. It's not as strong. It's beginning to be altcoin season as well. We'll talk about that in a minute too, about all the good stuff happening there. But just consider that for a minute. Waiting for a very, very low number may never happen. We don't know. But it'll be interesting to watch and come back to this in the future because I don't forget things. Now, another great news for the crypto space. Again, so much for choke point. An exclusive statement to CNBC. Twitter announced that users will now have the option to purchase and trade stocks and other assets like crypto. And eToro has all the big names in crypto starting Thursday. This partnership is a unique occurrence for Twitter, especially since Elon Musk became the CEO 6 months ago. And he spent too much on that platform, but he will make this into a 5x. I believe he paid 44. I believe he'll have it worth about 250 billion in no time. Easy 5 or 6x. And Musk has been pushing to transform Twitter into what he calls a super app, or the X vision, for over 2 decades ago. And this is just the beginning of bringing the user base of Twitter into financial services, or bringing financial service to user base and tying that all in with their social identity. This is big, very big. And if I was, well, first of all, he's already disrupting many industries like mainstream media. But can you imagine what will happen to TradFi if you can have a one-stop shop? Imagine having a bank with an on-ramp, the payments capability, automatic authentication, identity, and crypto all under one roof. Yes. And then a digital wallet hooked into. That's what we need, everybody. It's not going to come from the TradFi world. Now, in other news, speaking of the TradFi world, we have Warren Buffett having a complete conniption on TV again. And he said people like to play the lottery. Oh, for the record, I have never in my life played the lottery. So people don't like to play the lottery. Fact number one. But Warren Buffett believes the crypto craze, it's appealing to the gambling instinct. And we've had an explosion of gambling. Oh, well, I still have utmost respect from the guy. I learned a lot from him over the last 30 plus years. Brilliant, brilliant individual. But I think it's time to really leave things you don't quite understand. In addition, I just thought I'd point out here the 5 names that this CNBC TV show put up: Bitcoin, Ethereum, Solana, XRP, and Doge. So think about those being kind of the top 5 names that this TV channel is focusing on. I thought that was interesting too. In addition, this is a brilliant, brilliant post from Will Clemente, and he talks about the dilemma. It's kind of like a catch-22 situation between US regulators and Bitcoin and crypto. what do they do? Now, per his chart, it says basically US regulators are facing a significant dilemma. They can either disrupt the US or drive Bitcoin crypto activity, capital, talent offshore, resulting in less oversight and control. This is where decentralization comes into play, as Bitcoin crypto is poised to succeed in either scenario. Checkmate. Everywhere I go, people want to be paid in crypto. They don't want to be paid in fiat. And I'm working with people all over the world. And if any of you are watching out there, check your wallets today. But this is fascinating. You can't kill Bitcoin the cockroach. You can't stop DeFi. That is why it's such an exciting time to be alive. And the more you try to stop it, the more popular you actually make it. So let's talk about Ethereum. After Shapella, up 5%, broke 2,000, and the strength is quite surprising. I thought there'd be a little bit of weakness. And a lot of people believe, when realized that the ETH Shapella dump FUD was a nothing burger, and everyone wants to stake more ETH since the process has been de-risked. That is very, very important. The risk of ETH staking. I never wanted to lock up my ETH and lock it in for whatever it was, 9 months at the time or a year. So I didn't do it. Now I can, and I have the option. So that is a game changer, and it's interesting to see exactly how the market will react. There is a big Kraken dumpage coming within a couple of days. That could impact the price. But if I see, well, I won't say the price, but this now becomes very interesting. In addition, in other news regarding layer ones, mobile first crypto era has begun. This from Yano. And the Saga phone was launched, and the Uniswap app as well. Both hit the market this week, and the era of mobile first crypto has finally begun. And I remember being at Meta headquarters, Facebook headquarters, years and years ago. It must be 12, 13, 14, 15 years. I don't remember exactly. Everywhere they wrote, "We are a mobile company, mobile first." Everywhere you looked, even in the bathrooms, it was written there. And this is opening up a brand new era for crypto, especially when you consider the importance of your digital wallet being native to your device that you have with you 24/7. So interesting to see what will happen from this. In addition, Solana mints a new record, 1.2 million NFTs minted in, I don't know, just less than a month. And they are just getting started. And this is 1 million compressed NFTs. Now, again, NFTs is not just a picture of a monkey or whatever else, but I do believe the whole future of the world will be tokenized, and NFTs will be like your receipt. You know, it could be a concert ticket or a plane ticket or bus pass or whatever else, a piece of real estate. It'll all be an NFT, and that will be fantastic. It'll be in your little digital wallet, which could be in your phone. So again, exciting world ahead for us all. In addition, great article from here, Cardano to the moon, from, I think it was Finbold. And crypto trading expert predicts a 44% climb in price. I do not recall this expert's name, but this is his chart, and price could go as high as 61 cents from where we are now, about 41, 42. So don't get too excited. And you know why? This is an interesting story. I asked the audience on Monday or Tuesday, I can't remember which day, I said, do you want a mining update? Because, you know, I saw things cooking. You know, they were lagging behind the Bitcoin price. And people said, no, nobody cares about miners. Miners are boring. Well, I think miners are boring. CleanSpark is up 70% in 3 days. Okay, so there is money to be made in these proxies if you can time it right. So remember that. And these guys print, last time I calculated, they print about 6.1% of their market cap every month in Bitcoin. Okay, so imagine $100 million in market cap. They're printing 6.1 million in the revenue they get, the profit they get from Bitcoin sales. That is staggering. Annualize that, it's insane. This is why the world is waking up to these money printers like CleanSpark. And as the price of Bitcoin rises, these guys become more and more valuable. And again, I had Zach Bradford on the show a couple of weeks ago, and we got some good insight as to the potential of crypto mining and how they are positioning themselves. Let's talk about crypto again, and the VCs have left the building, as you can see here from this chart from the Financial Times. And a lot of people, it's funny, the Financial Times article was talking about well, the reason the VCs have left is because Bitcoin isn't proof of stake and they should move to proof of stake. It was kind of hilarious. It's nothing to do with that at all. It's because of the bear market. Anyway, who writes these papers? No offense to anybody out there from the Financial Times, but you can see here the VCs have fallen off, but they're coming back. And that will be a big boon as well, especially with, the fact that ETH is through Shapella. There'll be a lot of investment, I believe, in layer 2s and scaling that platform as we go forward, as well as building on other layer 1s that are out there. Now, let's talk about the Coppock signal. This is a blast from the past. I haven't heard of this puppy in decades. It is a very rare technical-based buy signal called the Coppock signal, and it suggests the long-term outlook for US stocks is constructive and the bottom is in. Now, the Coppock Buy Signal is a TA indicator that identifies buying opportunities in the stock market. It was developed by Edwin, I think, Sedgwick Coppock in 1962, and is based on the idea that significant buying opportunities arise at the end of a bearish cycle. That's what we're coming out of, apparently. We're well out of the bearish cycle, in my opinion. But it's calculated by adding the 11-month rate of change and the 10-month weighted moving average of the stock market index, and smooth out over time with a 14-month weighted moving average. Sounds complex, but it's not really. I have it next slide in TradingView. But it's a long-term indicator. It's best used in combination with other indicators. Don't rely on this alone, and don't even rely on TA alone. TA helps determine when you get in, when you get out. It doesn't tell you what you should get in and out of. That's very important. Let's look at the Coppock Curve versus the S&P 500 here. You can see when it's red, it's down. But when that red tail starts turning up, that means the bottom is in. And it's very, very rare it happens. Last time we saw this was about 2009, 2010. And before that, it was after the dot-com bust. It was a double bottom there, but that was a crazy time where things got completely far too overinflated and crashed down hard. So for those people that study the S&P 500 and these TA indicators, it's a piece of history here. And I did say I do believe the S&P 500 would hit 4,700 sometime in 2023. There's a very good chance of it, like 60 to 80% chance. And that's strange because you're going into a recession. And I keep saying the markets rebound before you even know you're in a recession because they look forward. Remember that, everybody. Now, good news out of the Team UK. Anybody out there? I see you, Brocade. Thanks for being here. And Bill Wammers and the whole team. But this is super, super interesting. And there's a lot of stuff going on with France and UK and Europe right now. But LSE, French Clearinghouse, signed a deal with the UK-based GFOX to offer trading in Bitcoin derivatives. Now, there was a lot of talk that the UK is trying to bring financial services back to London. And here they are, jumping straight into Bitcoin derivatives. So this means it's a really good thing. This clearing will be entirely separated from other operations, including a segregated default fund. New contracts will be based on the GFOX Coinmetrics Bitcoin reference rate. And the move comes in as Bitcoin's price has surged over 80% this year. This is going to drive institutional interest in the UK through the roof and also drive regulatory actions in the UK and all the crypto world, etc., when they're looking for a new home as they potentially escape the US because of the draconian nature of the regulation here. So well done, Team UK. It's been a long time coming. And also, I think this is also fueled by many different things happening at the same time, like Brexit, loss of some TradFi businesses. Now they're jumping headlong into crypto. So fantastic. This is bigger than you believe. And it will drive a lot more institutional interest. Like I showed you, the Bank of Canada buying Bitcoin, but buying it through MicroStrategy. Now, other banks in the UK could buy these futures products. Now, let's talk about AI for a second. Amazon jumping on the AI bandwagon. So Amazon CEO just wrote, his name is Jassy, that the company is heavily investing in two areas that are core to setting up Amazon to be successful in the future for many decades to come. And he hinted that LLMs and generative AI will be a game changer for customers, shareholders, and Amazon didn't want to give any more details, but they said it would be integrated as well into AWS, that's Amazon Web Services, and to enhance a lot of tools and usage. Everybody's jumping on AI. Meta, Tesla, Microsoft, Google, etc. So it's going to be a very interesting world, and we'll see who will emerge as the leader going forward. Now, why? The video is titled Hard Assets. Why do we care about hard assets? Well, yesterday I did a macro video, talked a lot about debt games, and then I came across this slide today. This is who the winner is of the debt games. This is the top 5 countries with the highest national debt in trillions. Again, I've showed many visuals as to what $1 trillion looks like. So if you're near a computer, go to Google and ask for a visual of $1 trillion. You will not believe how much money this is. It's just completely mind-blowing. But now people are just throwing the word around like nothing. Hey, Darren, appreciate you. So if you look at this, this is, I think, from Finbold. And this is the national debt as of yesterday. Really fresh data here. You can see China's national debt amounted to 14.34 trillion, ranking second globally. I did talk about USA versus China and money supply and everything else yesterday. I thought this would dovetail very nicely into that. But this high value reflects a year-over-year increase of 3.81 trillion. That's 36.18% more debt from the year previous. Wow. So imagine increasing your family's household debt by 40% in a year. That would be insane. Now, in comparison, the United States holds the record, having the highest national debt globally, about 32 trillion, and they only increased by 4.3%. And Japan holds the third spot with about 13.36, coming in right behind China. UK is on there too, as well as Germany. But the point is, this debt is growing like mad. 40% increase in debt in China in a year. It's insane. And look at this. Let's talk about deficits, because the more debt you have, especially with raising interest rates, your deficit's going to explode. And here, US 2023 deficit is exploding. The 2022 number is in purple, and red is 2023, and it's going to be off the charts. My estimates at the last year was about 1.2 trillion in debt for the US. Now it's about 2.4 trillion is my estimate today. It could even be higher because they are just, the more deficit they have, the more debt they incur, and the more servicing costs on the debt, and it just spins out of control. You can't stop it. It is absolutely insane. I think the number is here as receipts about $1 billion, and they're spending about 1.7 like every quarter. But this is even funnier. Greg Foss tweeted this 7 hours ago. The USA just reported a monthly deficit of 378 billion. Call it 400 billion. That is 0.4 of $1 trillion. This is absolutely debasing fast. And I tweeted back, hey, $500 billion here, $500 billion there. But that is just in a month. So I haven't verified this actual monthly deficit, but I know it's going to be high. And that's why I believe it could be way north of 2 trillion, because also tax revenue will be extremely low in 2023 because not many people or nobody made money last year, because it was the worst year in the stock market in 50 years, and a huge chunk of revenue comes from capital gains taxes. So we call that trillions, and it's scary. I think there's a show called Trillions too. Anyway, this all means, everybody, more QE is coming. It's time to print. Interest expense on US public debt alone rose to 812 billion. This is from Charlie Bilello over the past year, and it's going north of $1 trillion real fast. Half of the debt will roll into 4 to 5% handles, and is coming from a 1.5% handle. So that'll triple X half the debt. So this is easily going to go to 1.2 trillion, and this will smash the budgets, explode the deficits, and this will cause money printing, liquidity, which will debase all assets, but also rise all assets too. So it's very good news for hard assets like gold and Bitcoin. So this is gold and YCI. The YCI is the yield curve inversion. This is from Tavi Costa. And it's fascinating to see how the gold S&P 500 ratio continues to track its historical performance. Once again, after major distortions across the US Treasury curve, that is 10 years of zero interest rate pretty much, and then jacking it really high in a very short window of time. And empirical evidence suggests that today's performance of precious metals relative to overall equity market is still in the initial phase. Now, to be precise, if you go back to 1970, the ratio tends to appreciate on average by 72%. That is the gold or yellow line there. And if you look at, let me see, make sure I get this right. The other line that I believe is more representative today is the yellow line. Sorry, 70%. The blue line is the 1973-1974 recession and tech bust, but that is post-1971 when they unpegged from the gold standard. So crazy times ahead, but remember, gold is still very manipulated, very controlled, but there's another hard asset that we like, and that's Bitcoin, and people are waking up to it. That's why if gold does well, can you imagine how well Bitcoin will do? Remember, gold is up 9% year to date. Bitcoin's up 82%, 83% right now. So it's outperforming by, 11x. And imagine if this happens with gold. This could make the last bull run for Bitcoin look small. Again, we have all the ingredients. We have the macro driving the world towards hard assets, and we have absolute scarcity. And it's only just catching on. So with that, everybody, everything's connected. Thank you so much for being here. Thank you so much, Nick H. and everybody else out there, and T&D Tesla for keeping us all safe and respectful. And Silver will buy loaves of bread from Tom Billion. Yes, I think it was Peter Schiff said a pack of gum in a few years will cost $1,000. He said that on David Lynn's channel the other day. So if this is not good if it happens, but you need to be prepared, and you need to have these hard assets that go up faster because they are scarce. Absolute scarcity, absolute hardness is what we're looking for here on this channel. So thank you all for being here. See you all later. Hit the like on the way out. I much appreciate that very much. And I'll see you all tomorrow. Good show coming too real soon. Bye.